Good morning. We're a little bit late today. Sorry. More earnings today. And first, some drama from the Hill. Joe Biden is asking for another $1.8 million to triple to battle Chinese competition in his joint session 100-day speech to Congress yesterday. One of his targets is going to be a tax loophole that enables deferring capital gains tax on real estate deals, which is worth about $40 billion in federal income. Republicans are, of course, against this. His speech overshadowed the Fed head meeting, which, as expected, held on to its 0.25% range and easy policy. Jerome Powell once again calling out labor weakness. U.S. indices took little notice of excellent quarterly earnings reports. It's what happens when cheap money bolsters the markets. There's a disconnect both when the nation's economy is down or up, and when the president aims for big companies to be paying for by the rich, by big government to be paid for by the rich, which explains the slight gain in the Russell. That's the index that covers companies with a smaller market capitalization. The dollar continues slipping after last week's mortgage applications slipped by 2.5%, despite a 3-tick drop in the 30-year mortgage interest rate. March's trade deficit increased by another $3 billion up to 90.6, and wholesale inventories expanded by 1.4% month on month, compared to the previous reading of 0.9. Retail sales in Canada increased by a pleasing 4.8% after a 1.2% contraction in January. That's edging the Ludi up a tad. Today we'll be getting our weekly jobless claims reports alongside Q1's preliminary GDP reading at 12:30. CySEC, that's the Cyprus Securities and Exchange Commission, has announced a new regime that will enable UK firms to provide financial services without actually having to open a physical office on the island. This is one way of solving the loss of passporting rights post-Brexit. To explain, to be regulated for providing financial services throughout the EU, it's enough for a single state to register that company. Before Brexit, that could have been London or Cyprus or France and so on. After Brexit, UK financial companies lost those passporting rights to the EU. So far, 96 companies have applied, 88 of them have been accepted. Equities in Europe were mainly up by 0.25% yesterday. Banks surprised mainly to the upside, but there's caution in the air ahead of yesterday's FOMC meet. I don't understand what that meant. Consumer confidence disappointed in Germany in May. It's at a negative 8.8, while France managed to maintain its 94-point reading for April. And the 6-month bond in Italy auctioned off at a slight increase in yield levels. Later today, more sentiment markers from the EU at 9 GMT with German CPIs in at noon. Asian benchmarks are mainly up this morning, except for the export-focused Shenzhen Composite, as the yen finds itself at a 7-week high. Business confidence in New Zealand improved slightly in April, and import and export prices in Australia also soared. Exports up by 11.2% in Q1, which is double the previous quarter. At 1:30 tomorrow morning, we'll be privy to some housing data and producer inflation. That'll be in an hour after Japanese industrial figures and employment in March. Construction data from Japan tomorrow at 5 in the morning. China's manufacturing and non-manufacturing PMIs a little bit earlier at 1 a.m. GMT. With all that data coming in, an interesting pair to look at is probably going to be the dollar-yen, which bounced off support at 107.60 on Tuesday, as we can see on this one-day chart. We can see that coincides with the 38% Fibonacci level, and we could be in for a head and shoulders development, in which case 109 is going to be hard to break above. On the hourly chart, that translates to R1, with R2 waiting at 109.30. Will we fall below the central pivot? Well, the RSI is positive, and we've just crossed above our 21-hour moving average. So even though there's a hint of optimism, you should probably wait for the data. Oil is up this morning thanks to a tiny but welcome 10,000 barrel EIA increase in crude oil inventories, as well as an OPEC announcement that it's going to gradually increase production alongside projected demands. Reuters this morning reports that Chinese investors are looking to purchase about 1% of Saudi Aramco's online business. That's actual production, and it's worth about $19 billion. While Bitcoin languishes below the 50K mark, we are looking at bridling interest in Ether, which this morning hit a record 27.23 after the European Investment Bank issued its first 2-year digital note, which uses Ethereum's blockchain technology. These bonds have a zero coupon, and there's about 100 million euros of them out there. Van ex-Bitcoin ETF issuance, meanwhile, has been postponed by the SEC in the US once again. Major earnings reports yesterday were excellent, with Apple revenues up 54%, eBay up 42%, Facebook up 48%, and Mitsubishi all exceeding expectations despite continuing chip shortages. Chip designer Qualcomm, which reported this morning, exceeded expectations on both revenues, which are up 52%, and earnings up 276%. And they've been a major beneficiary of the ban on Chinese chips in the US. Spotify announced a 24% increase in subscribers, pushing revenues by 16% to 2.15 billion euros. Eurobanks also exceeded expectations, especially Deutsche and Santander, the latter despite a 3.5% drop in income, while Lloyds missed on earnings and a beat on profits. Airbus squeaked by, maintaining its forecast, while Lufthansa reported a smaller loss than expected, and Boeing continues missing on both revenues and EPS. Earnings today continue with Twitter, MasterCard, Comcast, Merck, McDonald's, Glencore, Carlsberg, and Amazon. Amazon could get into trouble as the U.S. Labor Board uncovers evidence of employee coercion during last month's Alabama vote on unionization. Allegedly, company agents threatened employees that if unions stepped in, Amazon would close down the warehouse, this according to Reuters. And so we leave you with more corporate wrangling between bullies and pros. See you again tomorrow.